we were expecting some barrels to come back onto the market this year, but we've been surprised by how much OPEC Plus has been willing to bring back to the market considering lower demand. And so what we're seeing is OPEC basically increasing supply at a time when demand is weakening, and that's pushing down prices, right? Now, the interesting thing is, why is this happening? Why is OPEC all of a sudden deciding to increase supply? Now, one way of thinking about it is that Saudi Arabia wants to increase its market share. At the same time, they want to make sure they can boost their economies by increasing output. So that's one explanation. Another explanation is, of course, there was poor compliance, and so they want to allow other producers to just produce more because the compliance was low. Now, you mentioned the connection between oil prices and inflation, and I think one of Trump's priorities is to actually bring oil prices down, either through higher production, mostly through higher production. And this is because he sees lower oil prices as a massive tax cut to the global economy. It improves the pocketbook of the individual consumers because the price at the pump is lower, and it also reduces the input costs for manufacturers and energy-intensive producers. And we're seeing this not only being positive for the U.S., but also for other economies in Europe, for example. And so his focus is to basically boost GDP and growth through lower oil prices, but also helping to boost or to lower inflation such that the Fed can then cut.
Indeed. So what makes it so interesting to me is that even though we have seen more supply coming onto this market, we're still looking at prices holding at around this 70 USD handle, at least for Brent. Do you think that oil will eventually have the 5 handle in front of it that President Trump has suggested that he wants?
No, I think that's too low. So our current forecast is for oil to average about $68 this year. So that's Brent, and that means rough sideways trading from current levels. Now, we don't think it's going to head back to the 60 level, just because now there's a bigger geopolitical premium baked into oil prices now. So even though OPEC is increasing production, as you mentioned earlier, the U.S. shale producers are not increasing production as much, just because their cost of output is a little bit higher, so they're not profitable if they're producing at such low prices, and that will restrict some of the production out of the U.S. and the supply. But at the same time, as I mentioned, the geopolitical risk premium, whether it's the renewed Houthi attacks or just the memory of the 12-day conflict between Israel and Iran, which led to huge concerns around the closure of the Strait of Hormuz. So for that reason, we think oil prices, despite the increase in supply, will probably hover around the 65 to 70 barrel area for the next few weeks and months. And that means that our oil price forecast for about $68 this year looks reasonable in our opinion. We think oil prices probably head a little bit higher next year, just because the global economy will improve, so a little bit higher than $70 in terms of the average, maybe 72, and that's really because demand is going to come back.